How's it going, everyone? This video is going to be over important time levels that I use every single day. So let's get into the PDF and get started. So here we are in the PDF, and let's take a quick look at why I chose these times here. If you take a look, 1800 is the new daily candle open. Midnight open is midnight. 8:30 is when the news embargo lifts or there's high impact news. 9:30 is when the New York Stock Exchange opens. 10 o'clock is when we have a new 4-hour candle and sometimes news. And then 2 p.m. a new 4-hour candle. Now these time openings are going to be slightly different between asset classes. For instance, if I'm looking at Forex, these 4-hour candles will change, and we don't really have the 9:30 open with Forex. All times are shown in Eastern Standard Time. So now how do I use each of these time levels? Well, with 1800, midnight, 10, and 2, I'm focused on using those with the open, high, low close of its given time period. So for the 1800 and 0, that will be the daily candle. 10 o'clock and 2 o'clock will be a 4-hour candle. Now I also use midnight as just a support and resistance level or discount and premium, and the same thing with 8:30. So for instance, a lot of times midnight and 8:30 will provide support for price to go higher or resistance for price to go lower. I can consider it a premium. Now I also look for a Judas swing or an order block formation at midnight, 8:30, and 9:30. Let's take a look at this. So for instance, if I am bullish, I want to see price open, make a low or this lower wick, make a high and then a close, right? So if I know where these levels are and I see us move lower, change the state of delivery, I'm anticipating higher prices. We'll get more into this in my open, high, low, close video. Now the same thing applies with the 4-hour candle, and that's where I get the 10 a.m. and 2 p.m. So if bullish, we have open, low, high, close, or accumulation, manipulation below the opening price, distribution. Now, with the 8:30 and midnight open, I will consider premium or discount, as well as support and resistance. So for instance, if I am bearish here, and we are above both 8:30 and midnight, then that is a deep premium, and vice versa. Now, with Judas swing or an order block, I'll use midnight, 8:30, and 9:30. And what I'm looking for there is if I'm bullish, I want to see opposing runs at these times. So for instance, bullish here, 8:30 makes an opposing run, closes over, that's now an order block. I don't expect this low to be taken as we continue higher. Similar thing here, 9:30 makes an opposing run lower to continue higher. Let's hop into the charts and go over various examples of these. So here we are in the charts, and I'll do my best to put all of these concepts kind of together in a few examples, as well as individually. So the first thing I want to look for is a bias. So if you notice, we respect the consequent encroachment of this wick. We're closing inside previous day high. So I'm looking for the next day to go lower. So let's drop down to the lower time frames. So here we are down on the lower time frames, and what do we notice? Well, currently our daily open has no upper wick. We're still bearish. We're leaving failure swings on this low. So ideally looking for price to trade to make a new low a day, right? Now, where are we in terms of premium and discount with midnight, right? We're above it and we're bearish. So that can be considered a premium. We tap into the daily open. We make a new high. So with my anticipation of bearish price action, I'm anticipating this to form a wick during New York to make a New York reversal to run lower. Ideally, I'm looking for this candle to look something like this eventually. A wick here, a body, and a wick. So let's see what happens. We go above daily open and midnight open, a deep premium, series of up close candles. That is an order block there. Now let's see what happens at 8:30. And if you notice, what is happening? We can't close below midnight open. So it's using it as a support and resistance level to trade back where? Ideally to this order block. Now 8:30 makes an opposing run, right? So this is what I mean with a Judas swing. 8:30 opposes my anticipated daily order flow. Now if it's reaching up there into an order block, let's see what happens. 9:30 reaches up. Now we get distribution lower, and there we go. And we come back, and you see how this order block is paired with midnight open and 8:30 open, using it as a support and resistance level to make a new low. Now you can see, using that, we anticipated the daily open, high, low, close using midnight and the daily open. We used 8:30 as a discount and premium level, as well as an opposing move or Judas swing. New York Open was that distribution time. And then when we come back to this propulsion block, we also have it paired with midnight and 8:30, which I use as support and resistance levels. So you can see here at the 4-hour time frame, our 10 a.m. open, right? So that's our time frame that we're looking for, the 4-hour power of 3. If we're anticipating downside, we see this closure here. We can't close outside the range. We come back in. So anticipating open, high, low, close on the next candle. What do? We open, we make a little high, go lower and close. Now 2 p.m., what are we going to get? Well, if we're going to get a retracement, that will happen at 2 p.m. and we get a little retracement there. You can see how it sweeps this low to then go back into the range. So that is a great example of combining all of those concepts that I talked about in the PDF together. So let's go back to the daily chart here. If we're anticipating a continuation lower, what are we looking at here? Well, we formed a swing high, we close below this up close candle. So if that is going to be validated, I'd like to see it respect the consequent encroachment right here. So going down to the lower time frames once again, we'll go ahead and mark out our daily open. And then what do I want to see? Well, I want to see an open, high, low, close, right? Because I want a continuation of the trend lower. Where does that high want to be put in? Well, ideally in the lower half or at this mean threshold of the up close candle on the daily chart. So as we continue ahead here, you can see, make a low. Okay. I want to see what happens when we get into New York. Okay, so played a little bit too far ahead there, but what do we notice? We are trading above the daily open and midnight open. So considering that a premium at 8:30, what happens? Let's go down to a lower time frame to see this. You can see at 8:30, we make an opposing run to sweep this high before the distribution lower, right? What is midnight used? Once we close below, used as resistance to continue lower. So going back out to this higher time frame, we're anticipating a continuation of trend lower to make an open, high, low close on the daily time frame. Let's see what happens. We get a continuation. You see how New York open on a lower time frame, this wick, that means it went higher first to then go lower. Once it trades back up, New York open is used as resistance. So letting this continue to play out, you can see how New York open was once again used as resistance. So going to the 4-hour time frame, you can see what happens here. Well, at 6, we make an opposing run, reaching back up into these up close candles and then dropping lower. So what do we have? This up close candle into an important level. That's an order block. So if we're going to get a retracement, when does that occur? Well, it would be on the flip of a new 4-hour candle or at 10 a.m. And 10 a.m. gets that move up into that level. So you can see how that timing works. If we're going to continue down, when would that occur? At 2. You can see we start to make a move lower at 2. So hopefully you can see how I use these time levels every single day. Let's take a look at our next example here. We are currently above our daily open and midnight open. Let's let it play out a little. You can see right here, we sweep out all these lows. So if we're going to get a continuation higher, we'd have our open, which is right here, our low that was just put in, and then we'd want to see it continue higher to put in a high before closing, right? And what do you notice? When does this move down occur? Or if we go down to a lower time frame, 8:30 makes a move down, right? Manipulation, down, distribution, where? Up. As we let this continue forward, what happens? Midnight open is used as a support level to continue higher. Let's see. And there we go. We start to continue higher. And as we let the day finish out, you can see open, low, high, close. Midnight open was used as that support level. And when does this distribution occur? If we go down to a lower time frame here, you notice it happens after 9:30, right? 9:30 makes an opposing run. We close over and then we get continuation higher. Once again, the 4-hour candle, we sweep the low, close. If we're going to get a continuation higher at 10 a.m., make an open, low, high, close. So here we are in our next example. And if we just take a look, what do we have resting on these highs? Some pretty equal highs with an imbalance above. And what do we notice in terms of premium and discount with these levels? Well, we are below midnight. We are below 8:30. We are below the daily open, And New York Open just made an opposing run or a run down, right? 8:30 made a run down. Let's see what happens. Okay, opposing run down, close over. This is an order block. So now if this New York reversal is going to occur, this low should not be taken. Now we just had a new 10-hour candle here. So we make an open, low, high, close, right? So let's see. So there, I'm anticipating to be the low of the 10-hour candle. I don't want to see open, low, high, close, or accumulation. Little manipulation there, distribution. And there we get a continuation higher. You can see how these levels are used as resistance and New York Open used as support. And then we go take the high out, right? Comes back, uses this as a resistance area, continues higher. So here we are on another example. What do we notice 8:30 did? Makes an opposing run or a run down. Do we get a closure over that? Let's see. One more candle there. Okay, we get our closure over. So now validating this as an order block, I would not anticipate this low to be taken. Let's go ahead. When could this distribution occur? Either 9:30 or 10, right? So we go lower. What do we notice? Here's New York Open. Makes an opposing run or a run higher. Normally, unless it's going to just go, if it comes back into the range, it's likely to seek these lows. Here we make a new low. Midnight is used as support. And let's see, as we near 10 o'clock, we now have a new order block formation. Let's see, 10 o'clock occurs. What do we get? An opposing run lower. And then let's see what happens. Little consolidation before moving higher. So if I change this to the 4-hour candle here, you can see we make the open, make a low, and then we'd want to see this continue until when? Well, we'd want to see it until 2 p.m. So let's see. When do we get a new 4-hour candle? 2 p.m. right here. So you can see we made an open, low, high, close. So let's take another look at that 10-hour open, high, low, close on the 4-hour chart. You can see with the 6 a.m. candle, we swept out these lows, closed over this down close candle. If we're going to get expansion higher, open, low, high, close. And there we go. You can see this candle opens, puts in a low, makes a high, then closes, and we're very close to this liquidity level. So then the 2 p.m. candle just goes and takes that out. So now let's take another look at the timing of things. You can see here, we have midnight open that's being used as a support level. Here we're reacting out of a fair value gap, down close candles out of that fair value gap, currently supporting price. What do we notice about 8:30? 8:30 makes an opposing run or a run down into this old order block. As we continue ahead, you can see we close over this, right? Let's see what 9:30 does, right? So we reach back into this order block. If you notice, 9:30 makes a run lower to sweep out some more lows, but that's the continuation higher. And there we go. But if you really get into the charts and study these opposing runs or just these times, you'll learn quite a bit. So let's get into a couple more examples. So here we are with another example. As we near New York, what happens? Well, we just swept out these lows, series of down close candles. Let's see, we close over. Now I can anticipate this low to be left if we're going to continue higher. Now we're currently holding this fair value gap. We close over the down close candle into that fair value gap. Let's see what happens at 9:30. You can notice that 9:30 is the volatility that enters the market to draw this move higher. And then we get a continuation. You can see how that timing works with 9:30 and 8:30. And for our last example here, we're going to take a look at ES on the 15-minute chart. And what do we notice about 8:30 here? 8:30 made a run higher. And we come and close below this up close candle, validating it as an order block at 8:30. You can see we retrace into this order block. 9:30 makes a run a little bit higher on a lower time frame and then drops lower. And then we get a move lower to sweep out these lows. Now you can see this is at 10. If we change this back to a 4-hour candle again, we just made an open low. We don't have any high yet, right? The high is the same as the opening price. So open low, you can see how midnight's used as resistance. And then we start to trade higher here. And the 2 p.m. candle is what finishes off these highs here. Now, I hope you found this video helpful. There is quite a few concepts that go into it, but if you get into your charts and study, you will figure some things out. If you did enjoy it, please consider liking and subscribing. and I'll see you guys next time. Have a good one.